What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Enphase stock, ticker symbol ENPH, on a variety of time frames in anticipation of the next trading day, Tuesday, February 20th. Well, Enphase stock here on Friday finished the day down $4.52 a share, 3.31%. Let's take a look here at this name as we head into Tuesday's trading day, starting with the 1 minute chart. By the way, if you guys get value out of these videos, please subscribe to the channel. I'm uploading every single day. Also, if you appreciate me covering Enphase, let me know in the comment section. That feedback helps out tremendously. So first of all, here on the 1 minute chart, we're starting just briefly on this chart to take a look at some potential intraday revenue generating opportunity. I'm a scalper. It's what I do every day, around a core position. Okay, so let's do that, and then we'll move on to the bigger picture here, looking ahead toward Tuesday, because really I want to look at this in an effort to see if we can potentially replicate anything that we saw on Friday come Tuesday's trading day. So looking here on Enphase, listen, it wasn't technically, at least by my definition, in play intraday on Friday. 99% of stocks every day are not going to be in play, probably more. It requires extremely elevated relative volume, usually a fresh news catalyst. And when you don't have that, you're left with, at least for me, for my trading playbook, you're left with setups that don't require the stock to be in play, which is much fewer. Okay. For me, a setup in particular, kind of the backbone setup that I teach and have taught for years now with the Roensch Capital Gold server. If you guys want to take a look at that, I send out my personal scalp setup alerts, swing trade setup alerts, unusual options activity. I also work with a number of platinum one-on-one coaching members every single day. It's at that first link in the pinned comment. But the setup I'm talking about is a setup I developed. I call it the repeat offender. And we look here, and we have a really interesting setup forming along what I kind of call volume-weighted average price support. It's a psychological, subconscious level, 2 standard deviations away from volume-weighted average price as we pull away. When there's no news, by the way, that's very important. News changes everything. On any normal day, on any stock, really, that's liquid enough, the more you pull away from volume-weighted average price, you typically see like a loaded rubber band effect. Okay, and I've tested 1 standard deviation, 2, and 3, and I've found over, many trades, forward testing for years now, literally, I have found 2 standard deviations to be by far the best balance with the most edge over time. And this was a clean setup. However, unfortunately, the channel was just too tight. I mean, you look here and we're looking at about a 25-cent channel, and that 9 EMA is not quite as tight against the 20 EMA because I'm measuring the channel between the 20 and the volume weighted average price support. So just a bit too tight on the channel. Otherwise, this setup, obviously it's not incredibly clean, but it's usable if that channel was a little wider. Okay, so this is kind of like a repeat offender, a somewhat sloppy repeat offender. It's not the textbook example I would use, but this is the kind of thing I'd be looking for still come Tuesday on a stock like Enphase, assuming it's not in play, like we don't get a fresh news catalyst or something come Tuesday. All right, but let's move on from the intraday mentality and start looking at a day-to-day mentality as we head into Tuesday's trading day. Starting with the 5 minute chart, really what I'm looking for is big changes in volume that support one thesis compared to another, like bullish versus bearish, from a big market sample size. Because, what a lot of traders might not understand is that you can have a downside move of 1% and an upside move of 1%. But if the upside move happens on 3 times the volume as the downside move, I would argue that the vast, or I would say a much bigger sample size of the market is agreeing with the bullish move in comparison, making it, while, somewhat of an equal percentage move, more powerful and more informative, in my opinion. Now, bears. A lot of bears are going to be looking, and the reason I'm bringing up bears is because we really, aside from this opening drive, which had high volume, which we already expect, however, this candle did have outsized volume as we hit that intraday high. That's worth noting. But from there, we had mostly bearish moves to look at on Enphase from Friday. But, I mean, listen, bears, I wish I had better news, but we look at this big dump-off candle and then this fade throughout the remainder of the day. And as far as elevated volume, that really, really supports that thesis from a big, big sample size out of the market perspective. We didn't really see that. Okay, so let's move on from the 5-minute because there's not really a ton of information to be had there from Friday. I think it would be kind of a force. So let's get really contextual now with the levels, the very important self-fulfilling prophecy psychological levels that I'm going to be watching very closely come Tuesday. That's going to be starting on the 30-minute chart, the 200 period and the 50 period, the two by far most popular technical indicators really ever. Now you're like, well, why are you only using them because they're popular? Well, kind of, but don't get the wrong idea. I'm using them because they're popular, but not because I want to use, so-and-so said this works, so I'm using it. I'm using it because everybody else uses it and they believe that it works. Hence, they make decisions around them. They program algorithms to make decisions around them. Institutions make decisions around them. Self-fulfilling prophecy. And that's exactly how I want it. So looking here at Enphase on the 30-minute, you can see we're right between the 200 period and the 50 period. Here's what I'm looking for from a bullish perspective. If we were to see a downside test of the 200, I want to see that hold hard as support and bounce as quickly as possible away from that level. Upon an upside test of the 50 period, a breakthrough and reclaim as support and then pull away is what I'd be looking for. Now, if I'm a bear, an upside test, reject hard off the 50 period, and ideally, your number one priority if you're a bear, make a downside test of that 200 period, break downside through, retest, and reclaim as resistance, and fade downside off of that 200 period. Let's move on now to the 4-hour chart. Take a look. You can see here that the 50 period and the 200 period are making, we've had this big upside move lately in Enphase, back up through $100 a share and higher. And you can see here that these, they're going to take their time getting upside. It's currently more than 10 points away to that nearest level. So really just what I'm looking for here on the 4-hour, if I'm a bull, just want to see that 50 period continuing to move upside as quickly as possible. It is moving upside rather quickly now, and just get up underneath the stock, get some feet up underneath the play as quickly as possible for that psychological potential area of support effect. And if I'm a bear, I want this thing to stay low as long as possible, leave a big gap, right, for a big downside move, and then break downside through both of these moving averages here on the 4-hour in particular. Now, the most important chart of all, that's going to be the daily. This one is incredibly in play right now. Take a look at this. You see this? We're right up against the 200-day, arguably the most common moving average technical indicator, aside from maybe volume, in the market in the world today. And we're right up against it. Very obvious. When the TA is obvious, being that it's all a self-fulfilling prophecy, in my opinion, you can agree, you can disagree, that's what I believe here. Being that that's the case, do not overcomplicate the obvious story, because the obvious story is what everybody sees without even having a general understanding, or I should say a deeper understanding of TA. And when that's the case, that's the story that I want to look at. So very simple here, extremely simple here on the daily chart. If you're a bull, you want to see that 200 period hold as support, big time. And if you're a bear, very simple, you want to see that 200 period, 200 day, right, break downside and become resistance yet again. Let's take a look at the bias we have in the options chain here from Friday as we head into Tuesday. So this is just from Friday, how options traders are positioning themselves coming into Tuesday. Now you can see here the volume, we can't expect millions of contracts out of Enphase stock, okay? But we have 41,000 approximately total contracts traded. As that volume gets lower and lower, the more of a grain of salt you have to take this with. But let's take a look. 21,000 calls, about 20,000 puts. So relatively undecided actually on the overall ratio. But if we take a look here, this is important. That short-term speculation range, that 0 to 20 delta. 5,900 calls, 10,100 puts. So the short-term speculators are actually leaning rather heavily bearish. Okay, but understand that volume is very low. Okay, so you can have one big bearish trader come in, buy 7,000 puts. It's not uncommon. and then all of a sudden they throw off that whole ratio. So understand that, take it with a grain of salt. But then you go toward at the money and in the money, those mid to longer term on average sentiment contracts, and all of those are leaning to the bullish side. Okay, the call side here from Friday. Make sure your risk is managed. Understand that the options traders can, of course, be wrong. Okay, take it with a grain of salt. It's just one factor of many. Listen, if you got value out of this video, please, again, subscribe to the channel. Appreciate you, and I'll see you in the next one.